Hello and welcome. You're watching All About Your Company here on ET Now. I'm Harsh Saita. Let's quickly look at first which company we're talking about. We're going to be talking about Borosil Renewables. When you're looking at the stock price, plenty happening in the space, by the way. There's a duty which the government has imposed protecting the players which manufacture solar glass, and Borosil Renewables is one of those players. A large part of the reason for that is the dumping that's coming in from China, affecting pricing, which has affected Borosil's numbers over the last few years. There was always traditionally a duty on this product. However, the duty was taken off in 2024, and that impacted the numbers in a big fashion. Thereafter, the duty was only imposed at the end of or effective December 2024. And therefore, Borosil Renewables came back into focus as a result of the imposition of that duty. Thereafter, the numbers have gotten better, but there has been a drag coming in from the international business. And now, likely, that drag is behind them, and they can focus more on the domestic business, on growth, and on expansion. And hence, this one looks very, very interesting in terms of it being at an inflection point to try and capitalize on, one, the opportunity, but two, also that opportunity will start reflecting on the numbers going forward. And we'll try to understand from Mr. Pradeep Kumar Kheruka, who's the Executive Chairman at Borosil Renewables, as to how that will play out. First, let's talk about what I want to know. One, they've spoken about the global opportunity and tapping into the global opportunity. First thing I want to know is how large is that opportunity and how capable is or well placed is Borosil Renewables as an Indian player competing against China in the global marketplace. How big is that opportunity? Point number two, China pricing as well as impact on the global opportunity that they have. Point number three, can top line guidance, they've not given a solid guidance, but the broad level range seems to suggest a 6 to 8% volume growth. Can that surprise on the upside is what I'm trying to get to. So around 1550 odd crore in terms of top line, can it surprise on the upside? Well, that's something we will quiz management on. Fourth piece is with regard to margins. Margins, they had guided for 25 to 30%. They've done 33. Now they're very confident of continuing to build on the 33% as well. Trying to understand where do they stabilize and how confident are they with regard to the margin upside that they're seeing. The fifth piece is with regard to cost savings. They've spoken about cost savings from their captive plant, and as a result of that, there will be cost savings going forward. I'm trying to understand how much. The sixth point is with regard to the 950 crore capex that they are planning. Post the duty levy with regard to their products on import of products, 950 crore capex was announced. They've done a couple of fundraisers since that point in around the same region as the stock price today. And therefore, I'd want to know whether capital allocation will come from where. Where will this 950 crore come from? Some part of it will come from the fresh raise, but also what thereafter with regard to capital allocation post December of 2026, once this entire capex cycle is behind them, which is December of 2026. So what happens to the capital that comes in post that? I want to know all of this. Now let's first start off with what Borosil Renewables does. And fundamentally, it's a company which is a solar glass manufacturer in India. It's one of the largest solar glass manufacturers currently. And what it also does is it has a capacity of around 1,000 tons per day. And it's part of the Borosil group. And that also lends credibility to the company. It has a 60-plus year expertise in glass manufacturing. Now let's talk about all of the products, and it's there across the board in terms of solar products. There you go. All of them is what it technically covers, and it does it through multiple furnaces, blast furnaces, not blast furnaces, but multiple furnaces that it operates across India. Let's talk about the geography. 88% of its sales are domestic and around 12% are export. It exports to countries like Europe or countries within Europe and Turkey. Around 70% of its exports, which is just 12% of top line, goes to Europe. So Europe is a decent chunk in terms of the top line. Can it continue to grow there? What is keeping it ahead of the curve with regard to Europe? They've also liquidated their German subsidiary, and therefore can Europe continue to be as large as it has been. That's the other piece I'd want to know. In terms of production, entire production currently in India, they had around 350 tons per day, which they used to do out of their German subsidiary in Europe, but that has been liquidated, which I did mention. Now they do the entire 1,000 tons per day sitting out of India. So that's something you want to note. The additional capex will lead to this going to 1,600 tons per day. So there's going to be a meaningful uptick with regard to capacity from the current 1,000 tons. Also, just to kind of outline the size of the opportunity, 70% of India's solar glass is imported from China, 30% is manufactured domestically. So this is a classic play on import substitution, which is made in India for India. And therefore, and there is a large vacuum for that. So Borosil Renewables is well placed to actually likely capture that vacuum, being the largest player in the space. So that's something also that you need to look out for. And mind you, it's a 33% margin business, which is what it's done in Q3 or Q2 of FY26. So therefore, the margins also are nowhere less. Let's talk about the operational metrics now. And across the board, let's talk about the P&L account first off, see how it's evolved. We've looked at only the standalone numbers because on a console basis, it includes the German subsidiary. Now that we're not factoring that in, we will look at the standalone numbers as a better metric. So you're seeing those standalone numbers in front of you. In terms of the growth, it's a 3-year CAGR of around 20% on the top line. EBITDA has actually degrown as a result of pricing pressures that have come through, especially given its large dependence on duties coming from imports coming from China into India and competing against them. So therefore, you've seen that bit of pressure. EBITDA has been choppy, and in fact, profitability is actually down when you're looking at it over the 3-year term. When you're also looking at H1 performance, it's far more stable. You're looking at a 40% revenue growth coming in terms of H1 FY26 versus H1 FY25. EBITDA growth is far stronger. There's been a surge. There's been a one-time impact which is reflecting on profit after tax, and therefore you're seeing that net profit number which is completely distorted. But nonetheless, the 211 crore EBITDA is a very solid number, which also flows through on profit after tax. Technically, if I remove the one-off, which is the write-off that has come from the German subsidiary, which we spoke about. Now, let's talk about the operational metrics, and let's talk about the EBITDA margins as well. You'll see it's been very choppy, and therefore, we want to be very cautious when you're looking at the business with regard to the certainty. Now, for the next 5 years, you have duty certainty with regard to the duty of goods being dumped from China, and therefore, you might well see stability on margins, but we'll also get some hints of that from Mr. Kheruka, who will give us that sense. Let's talk about the balance sheet now. You'll see that the balance sheet, they've done a couple of equity raises, and as a result of that, the book value has seen a bit of a spurt, but the book value has compressed in H1 FY26 because of the loss coming in from the German subsidiary. So you'll see that on your screen as well. So book value went up, thereafter came off. And what you're seeing, though, is that the borrowing number has continued to come off. So that's a key positive. Borrowing excluding lease liabilities has come off sharply, and the cash and bank balances also remain fairly steady. But the quantum of investment which needs to be made, we'll try and understand how the capital allocation will work there. So a thumbs up with regard to the balance sheet because borrowing is low, but that borrowing number will well go up. But it's a 7,500 crore market cap company, and therefore that 200 crore borrowing number should ideally not really bother an investor, but we'll see where that borrowing number goes. Cash flow. Let's talk about that. In terms of the cash flow, it's been fairly clean. You've seen a decent cash flow to EBITDA conversion, at least over the last couple of years, so no complaints there. Net cash flows are also looking fine. Let's talk about the return ratios now. In terms of the return ratios, they've been very choppy, and the result of that is because of obviously pricing and profitability. The return ratios were 25-29% earlier, but they've come off very sharply. How certain are we with regard to the rebound in return ratios, especially given the capex that's coming in? Well, it might take a year or two for it to come back. And therefore, we'll have to wait and watch for that recovery to come through and how much of that really comes through. Let's talk about shareholding. When you're looking at the shareholding, around 59% to 62% is typically held by promoters. They've diluted shareholding a couple of times, once in February of 2025 when they did a fresh issue. They've also done one in October as a result of all the capex that they're doing. So you are seeing some bit of share of the promoters getting trimmed down, the stake, but it's limited and they still hold a 55% plus stake despite the October dilution. And therefore, that should not be a real concern per se. Promoters still have enough skin in the game. FIs and DI participation is extremely low, but it is there. There are some interesting DIs that have come into this round, including an Abacus, which is Sunil Singhania backed, and or rather Sunil Singhania managed, and you also have public shareholding to the tune of 30 to 35%. Relatively smaller company, mind you, viewers. So that's the other thing that you need to keep in context and perspective. Let's talk about the guidance now. Where is it that this one goes going forward? 1,600 tons per day by calendar year 2026 end. By March of 2027, this entire 1,600 tons per day should be operating at a good capacity. 950 crore is the investment that they're going to make for the additional 600 tons per day of capacity that they're going to be adding. They're expecting volume growth of 6 to 8% in FY26 particularly, and EBITDA margins should be in 25 to 30% range, but now they're speaking about being able to maintain the 33% margin that they have actually done in Q2 of FY26. So it's a very interesting time for a company like this, and we'll try to maybe pull the numbers for the next couple of years. No analysts track the stock, mind you, viewers. So this commentary will largely be very interesting to monitor and track and understand as to where the company goes going forward, because we don't have any estimates to work with. But let me bring on board Mr. Pradeep Kumar Kheruka, Executive Chairman at Borosil Renewables, to talk to us about what to expect going forward. Mr. Kheruka, it's great having you. Let me first start off by trying to understand how large is the opportunity size, both in India as well as globally. First, let's talk India, sir. How is competition shaping up, and how confident are you of continuing to build on the traction? Because you're setting up two furnaces, which are 60% your current capacity. So you're taking your capacity from 1,000 to 1,600. How much of an appetite or how much of demand is there in the system for you to be confident of the offtake from that additional capacity that comes in?
Thank you so much for having me. Yes,
we are expanding.
We are expanding by about 60% of the existing capacity. There is very little doubt in my mind about our ability to sell this to our customers. We have good relationships with all our customers. Our quality is world class, and we expect that as soon as enough glass is being produced, we should be able to sell everything. So in terms of sales, I see no issues at all. We are importing in the country nearly 8,000 tons of glass per day right now. 8,000 tons of glass is a lot. We are only looking at making another 600 tons. So that is not going to be a problem. There's another company which is, you might say, in the same business, who do about 600 tons of glass per day now. They're coming in with another 1,200 tons. I see no problem for them as well. We might see Reliance coming up with 1,000 tons a day, but that's expected to be for captive consumption. So at this moment, solar glass is in great demand. I'm happy to say that we are running flat out at full production. I cannot share numbers, percentages, or anything with you. I'm happy to say we've sold everything, and we have very little outstandings. We have no bad debts. All of that is going very, very well. And I frankly don't have any issues at all about being able to sell this glass.
Excellent. And sir, a viewer who would have probably looked at your presentation will not have a doubt either. So I'd urge viewers to go and look at the investor presentation that Borosil Renewables has put out. But let me, sir, talk to you about the global marketplace. You have an aspiration to also export, and export heavily. You believe that markets in Europe and US could well be very good opportunities for you, Mr. Kheruka. Where does that confidence come from, given the China factor, right?
Well, it's like this. I have friends in the automobile business. They have told me that what has been happening in China, I'm talking about the auto industry, and I'll tell you what is the relationship of the auto industry with the solar industry. So I have friends who have told me that the shift towards electric vehicles in China has gained a lot of momentum. The Chinese, meanwhile, have a lot of cars with internal combustion engines, and they don't know what to do with them. So they have crashed prices, and they have flooded the European market, just as an example. So now China dominates the European market for automobiles. Now, one of the reasons, since I was very much in the renewables market in Europe, one of the reasons why the German government was cautiously treading as far as taking steps on curbing solar module imports was that they didn't want to upset the apple cart as far as automobiles are concerned. What we now see is that that stands upset. And the Chinese automobiles with internal combustion engines are doing very well in Europe. So that fear which they had of not sort of upsetting the Chinese, I think, has come to a pass where what they feared has happened. So now there's a good chance that they may decide to step in and support the solar industry. If they do, there's going to be a surge in demand in Europe, which is very good for us because we have been present there. People know us very well. Our glass is certified over there. So that could become an additional market for us if this happens. But having said all this, the fact is that we are striving to meet the demands of our customers within India. And so therefore, demand is simply not an issue as far as Borosil Renewables is concerned as on date. I do not see tomorrow. I have never seen tomorrow. I don't know what it's going to bring. But if the past is any indication, I see absolutely no problem. That's one. Second thing, there was a little, I was hearing you speak about shareholding. I thought I should clarify, we have never sold any shares at all of the company. The reason why our holding has dipped marginally is because of fresh shares issued by the company, and therefore with a larger capital base and with the same shareholding, obviously the percentage drops a little bit. We did participate in our share issues in February last year. So at that time, we did increase our shareholding, for which are forcefully paid up. So I thought I should clarify that as far as shareholding is concerned. So far as our projects or our thoughts about expansion going beyond the 600 tons, as I've
Apologies,
said,
sir. I know I'm interjecting.
yes.
Sir, Mr. Kheruka, I fully understand. 100 crore is your participation, which happened in February of 2025 US. That's something you need to keep on your mind. So fully take it. Give us a pulse, sir, because I'm trying to get viewers to understand forward-looking for Borosil Renewables, what to expect. So when you're looking at hiking the production from 1,000 tons per day to 1,600 tons per day, where does that take your top line? Give us a sense of that. Does it take it to around 2,000 to 2,500 crore?
You see, the trajectory which we have already been able to establish would see sales in the next quarter or the quarter which is starting today. If it even keeps match with the last quarter, the trajectory could be as much as maybe 1,500, 1,400, something crores. That is assuming everything stays the same. And 60% more could take it up to the figure that you just mentioned, maybe 2,500, 2,400, 2,300. Hard to say. And of course, that also depends upon when we actually start getting production, which we expect should be by the end of this calendar year, that we should start seeing the first furnace come on stream. So yes, for the year 2028, hopefully the figures that you mentioned should be true.
Excellent. So once the first furnace comes on stream, you said it's going to come on stream fairly quickly. How much does that add to your top line, just the first furnace?
The first furnace should add about maybe 600-700 crores, I think.
So you should be at that level
No, I'm
even
sorry.
in FY27?
I'm sorry. That should be 30% of what, about 1,500, about 450 crores.
Fair. So you should be nearing 2,000 crore in terms of top line by FY27 itself. Is that the right way to look at the business?
No, not in 27, because if the furnace comes on stream by the end of this calendar year, then we just have seen a quarter in the financial year 26-27. We'd have seen a quarter of production there, and it's the year after that, 27-28, that hopefully we should be seeing the full force of the extra production coming up.
I forgot, sir, we are on New Year's Day. So yes, pardon me on that. Okay, yes, fully understood. So December 26, first furnace comes on stream. You should be, by 2028 full year, you should have the entire 1,600 tons per day added to your capacity. Talk to us about what that does to your margin number. You're currently at 33%. You've guided in Q2 that you're very confident of maintaining that 33% margin, Mr. Kheruka. Is there any scope for increase? Because my understanding is that there is some cost-saving element still left in your P&L account from captive power plant which you are going to utilize. How much of upside does that give to your margin, and how much does the additional incremental 600 crore add to your margin? 600 tons per day add to your margins. Give us a sense of that.
The second renewable power plant that we have set up in association with a developer has not yet given us any power as yet. So without that, we are at our lowest power cost ever. And with that coming in, that would give us a further improvement in our competitiveness, in our profitability once that comes on. Of course, I do not give any forward-looking projections, so I will not do that. But I can just say that the future looks quite bright. We are at the highest production ever that we have achieved now. Now we are running at the highest production ever, the highest sales ever, and we are able to make all collections. So, so far everything is looking pretty good.
Point taken. With regard to your asset turn, it's roughly 1 time. So can I expect that maybe your ROCs will be 25% plus once all of this comes on stream?
We have ambitious targets in terms of our financials, and we give everything we've got to trying to achieve them. And so therefore, I can only promise that our efforts shall not be wanting. Secondly, we do not expand at a pace where we believe we are not able to manage it. So we keep our management, bandwidth in view at the time that we plan expansions. So there is no reason to believe that we should not be able to achieve our projections, as time goes by. At this time, we have invested money for which there is no return as yet, because so once the returns start coming in on this investment, ROC will definitely go up. And we must keep in mind also that we have had a write-off that we have provisioned. We haven't had a write-off formally as yet, but we've provisioned all the money that we had given to the German company. But frankly, that's now a thing of the past, because we've provisioned it, and if we focus on our domestic operations, which are so far doing quite well.
Got it. Talk to us about 950 crore, which is the capex you're doing. How much of that comes from the equity raises you've done? How much of that comes from internal accruals? And how much debt are you going to take up?
So we have raised capex of about 500 and 370, so that's 870 crores. And this project is about 950 crores or so. So, of course, we have good internal accruals. So I would say that this project is already funded. We also have a term loan. We have term debt that we have undertaken. So we are flexible. I would say that finance is absolutely not an issue. We are completely funded for this expansion, and of course for operations as well.
Understood. So beyond FY28, the internal accruals to continue to fund your future capex as well. Is that fair to say, sir? 20 seconds. Sorry, I'm completely out of time.
Yeah. I would say that we would be having significant accruals. Whether we continue with glass or we decide to branch off into some other form of renewables is something I cannot say. But yes, we would be funded. We are a conservative company. We have great respect for our investors, and we try to manage their money very, very carefully.
Mr. Kheruka, it's always a pleasure speaking with you. Thank you so much for taking out time and giving us such a detailed understanding of what's playing out. And viewers, completely out of time on this edition of the show. So thank you so much for tuning in. Stay tuned to ET Now. More action on the other side.